As of the 28th of June, 2026, gold is at $4,000 an ounce right now. Silver is at $59 an ounce. That means right now it takes about 69 ounces of silver to buy a single ounce of gold, 69 to 1. That number, the gold-silver ratio, is something I've been referencing on this channel for a while without fully breaking it down. And today I want to fix that. Because once you understand what this ratio is and what it has historically meant, you start seeing the silver market through a completely different lens. This is one of the most useful tools in a silver stacker's toolkit, and almost nobody explains it simply. So let's fix that right now. Let's go hunting. So what is the gold-silver ratio exactly? It is the simplest calculation in precious metals. You take the price of gold and divide it by the price of silver. That gives you the ratio. Today, gold is around $4,000. Silver is around $59. Divide 4,000 by 59 and you get approximately 69. So the ratio is 69 to 1. What that number tells you is how many ounces of silver it would theoretically take to buy 1 ounce of gold at current prices. 69 ounces of silver equals 1 ounce of gold right now. Simple enough, but here's where it gets interesting and useful. That ratio is not fixed. It changes constantly as gold and silver prices move independently of each other. And over long stretches of history, that ratio has swung dramatically from extremely low, meaning silver was expensive relative to gold, all the way to extremely high, meaning silver was cheap relative to gold. Understanding where the current ratio sits compared to history is what gives it real meaning for a stacker. Let me give you some historical context because this is where the ratio becomes genuinely useful rather than just an interesting number. For most of recorded history, going back centuries, the gold-silver ratio was set by governments rather than markets. Ancient Rome fixed it at 12 to 1. The U.S. government fixed it at 15 to 1 for much of the 1800s. The idea was that silver was relatively abundant in the earth compared to gold, and that natural relationship should be reflected in price. Once the free market took over pricing in the 20th century, that ratio started moving around a lot more. Through most of the mid-20th century, it bounced between 30 and 50 to 1. In 1980, when silver had its famous price spike, it briefly compressed all the way down to around 15 to 1. In 2011, when silver nearly hit $50 an ounce, it compressed to about 32 to 1. Then in March 2020, during the early COVID panic, the ratio blew out to an extraordinary 123 to 1, the most extreme reading in modern history. Silver had been absolutely crushed relative to gold. And here is what's happening next. Over the following years, as silver recovered, that ratio compressed back down. By January 2026, when silver hit its all-time high above $120, the ratio had compressed all the way around to 34 to 1, an almost complete reversal. Right now, the ratio is back up to 69 to 1 as silver has pulled back significantly from those highs. Historically, that sits right around the long-term average, which tells an interesting story about where silver might be headed. Now, before I get into what this means for your stack right now, if you are finding this useful, hit subscribe. I put out a new video every week covering exactly this kind of thing. Silver market analysis, coin collecting, stacking strategy, all completely free. It genuinely helps the channel and I would love to have you along for the journey. So how do stackers actually use this number? What does 69 to 1 tell us right now? The basic logic goes like this. When the ratio is historically high, meaning silver is cheap relative to gold, experienced stackers tend to see that as a signal that silver is undervalued and may have more room to run when conditions change. When the ratio is low, meaning silver is expensive relative to gold, some stackers shift towards gold instead. The extreme moves tell the clearest story. When the ratio hit 123 to 1 in 2020, silver was extraordinarily cheap relative to gold by any historical measure. People who recognized that signal and bought silver in 2020 rode it all the way up to the all-time high in January 2026. That is not a coincidence. The ratio is flagging a major opportunity. Now, I want to be honest about the limits of this tool because a lot of silver content online oversells it. The ratio is not a precise timing indicator. It does not tell you when the silver will move or by how much. A high ratio can stay high for a long time before anything changes, and silver can fall even when the ratio seems to say it should rise. What the ratio is good for is giving you long-term perspective on relative value. At 69 to 1 today, silver is not as dirt cheap as it was at 123 to 1 in 2020, but it is also not expensive. It is sitting roughly at its long-term historical average, which means silver is not obviously overvalued relative to gold right now. For a long-term stacker, that is a reasonably place to keep accumulating. You are not buying at a historical extreme in either direction. You are buying at roughly fair value relative to gold, when the possibility of ratio compression working in your favor if silver outperforms going forward. So how do I personally use the gold-silver ratio in my own stacking decisions? Honestly, I use it as one data point among several, not as a buy or sell signal on its own. When I am deciding how to allocate my silver budget in a given month, I look at three things: spot price relative to recent history, the premium environment, are dealers charging more or less over spot than usual, and the gold-silver ratio. Is silver cheap or expensive relative to gold right now? Right now, all three of those factors are pointing in a similar direction. Spot price is well off the January highs. Silver is down significantly from its peak. Premiums have come in from the elevated levels we saw earlier this year, and the ratio at 69 to 1 is not signaling silver as outrageously cheap, but it's not expensive either. So my personal conclusion, this is a reasonable time to keep building the stack steadily. Not a screaming buy the way early 2020 was for anyone paid attention, but a measured, consistent accumulation environment. I am not going to tell you what to do with your money, but I would tell you what I'm going to do with mine. Stacking consistently, keeping my eye on the ratio, and staying patient. That has been the right approach for long-term stackers throughout history. Before I wrap up, let me show you how to check the gold-silver ratio yourself, because it takes about 30 seconds and is worth doing regularly. Two free resources I use constantly. First, JM Bullion at jmbullion.com. They have a live gold-silver ratio chart right on their site, updated in real time during market hours. Free to access, no account needed. Second, macrotrends.net. Search gold-silver ratio on their site and you get a beautiful long-term historical chart going back over 100 years. That historical context is invaluable for understanding where the current ratio sits in the big picture, also completely free. I check both of these at least once a week. It takes less than 2 minutes and keeps me grounded in where the market actually is rather than just reaching to short-term price moves. The gold-silver ratio. Simple to calculate, useful to track, and one of the few tools that gives you genuine long-term perspective in a market that can feel noisy and chaotic day to day. At 69 to 1 right now, silver is not screaming cheap the way it was in 2020. But the fundamentals for holding physical silver have not changed. Industrial demand is structural and growing. Physical supply has been in deficit for years. and the ratio suggests silver is not overvalued relative to gold at current prices. I am staying the course, stacking consistently, watching the ratio, building something real 1 ounce at a time. I want to hear from you. Do you track the gold-silver ratio? Has it ever influenced a stacking decision you made? Drop it in the comments. These conversations are genuinely one of my favorite parts of running this channel. If this video was useful to you, and I hope it was, please hit subscribe and leave a like. It takes 2 seconds and it genuinely helps Silverbeard reach more stackers who are trying to figure this stuff out. Every subscriber and every like tells the algorithm this content is worth sharing. I appreciate every single one of you. Next time, I am answering one of the most practical questions I keep getting from new stackers. How much silver should a beginner actually buy each month? There is no one-size-fits-all answer, but I'm going to give you a real framework for figuring out what it makes sense for your specific situation. I'm Silverbeard. Stack smart, stack with purpose, and I'll see you in the next one.